In today's video, I'm going to show you how you can copy the exact strategies used by quants and hedge funds completely with AI. Now, this is going to be super exciting because we're not just using simple TradingView strategies and indicators. We'll be building and training our own AI model to behave just like actual institutions instead of retail. Now, previously, you needed years of Python experience to be able to build something like this, but today I'll be showing you how you can do this from scratch without any prior experience using Claude Code. This way, we'll have a complete mathematic model that will constantly change and adapt to the market to help you become a more complete and profitable trader. So in this video, I'll first show you what this model is exactly and how it works. Then I'll build it from scratch so that you can follow along and have your own version up and running. And like always, I'm not a financial advisor and this is not financial advice. I'm just simply showing you how you can use the power of AI to build out some of the most complex and powerful algorithmic models that are currently being used by institutions in the space today. Now, to start, what we're going to be building here is something called hidden Markov models. You might not have heard of it, but this was popularized by Jim Simons at Rentech, who is essentially one of the most successful traders in history. Rather than trying to predict price, HMMs will try to predict regimes instead, which basically tells you if the market is in a trending bull run, a crash, or just choppy noise. It's a complex math probability model at its core, but we just simply use it to tell us whether we should be aggressive, defensive, or sit on our hands and do nothing basically. And while this takes pretty advanced coding skills to build, we're going to let Claude Code basically do all the heavy lifting for us. Now here's what the model that we're going to build looks like. It's going to be called a regime terminal, and baked into this model, most importantly, is the hidden Markov models that we were discussing. So with this, it's essentially going to label all of the current states of the market across one of 7 regimes. So for example, the first regime could be the best case, which is a full-on bull run. You can buy and then apply the same strategies. And then the worst case being something that's choppy, noise, or something that you just completely should avoid. So to understand what we're doing here, we first have this model baked in with 7 states. Then we have this strategy, which is 2.5x leverage. Now you can fine tune this with the AI model back and forth to find out how much leverage you're comfortable to put in and how aggressive you want this model to be. Then we have the entry. So this is something that, again, you're going to test back and forth to see how many confirmations you want before you actually enter into a trade. We have the exit, which is only when a regime changes. And then finally, the minimum hold, which is one of the most important aspects here. This is typically called a signal hysteresis or a regime confirmation lag. What this does is basically have a weighted time set to your regimes. And at its core, it's just important to know that the money isn't just made on knowing when to enter. So like even if you were to enter into like a bull case regime, it's not so much that you buy immediately, or if you were to enter into a choppy regime, it's not that you sell immediately. Sometimes it's best just to wait and determine what to do. And in the patience to not just re-enter another regime, I think that's where a lot of this magic and profitability is truly shown inside the regime terminal. And if this is confusing, let me just go ahead and run it so you understand everything I'm saying. So in this section here, we have a ton of different tickers that I just added in, but for our example here, I'll make this simple and add in Bitcoin because it's always trading. Then we can add in the date range for a backtesting window. So this means that we're going to simulate how it would have traded every single hour throughout the past 2 years if we use the same hidden Markov models with these same exact strategies and presets. So with the minimum holds, number of confirmations, the enter and exit whenever there's a regime change. So if we go ahead and click run analysis, we can see that it's actually training the hidden Markov models. So if we were to watch the terminal here, this is what's happening in the background. So it's literally running 17,000 data points to build its own mathematical map of the market before it makes a single trade. This way, the AI is basically learning the market from scratch here with all of our HMMs and strategies in place. And then below, you can see all the actual trades with the momentum percentages, probabilities, and the confirmations, which triggered us to actually take that trade in this instance. Now, the most important part are the results here and what makes this HMM model truly special. So it'll first tell you what regime you're currently in. So right now it's detecting that we're inside the bull run trend. Like I mentioned, there's going to be 7 different regimes. So it can be bull run, crash, noise, chop. So it's going to tell you either to enter trades, exit trades, or hold if you are inside the same regime still. And we can see that it's characterizing 7 states based on 11,000 hourly samples, and there's even a confidence. So this is a key portion so you know how probable it is that we are actually in the detected regime that it says we're in. And obviously we need to layer this into the strategies, which we do have inside this left-hand side as well. Then here we can see that the current signal is long holding. So what this means is that essentially wants us to hold all the long positions that we currently have because we're still inside the same bull run trend detected regime, which is again, one of the best regimes to stay in. So just to repeat how this works, at its core, we're first figuring out the state or the regime that the market is currently in. So right now it's a bull run, which is very good. And then once we know the regime, then we're going to label on strategies on top. So this is where we use the amount of leverage, how long we're going to hold between regimes, the amount of confirmations we need, which can be any sort of, specific strategies or indicators baked in. But the key portion and what really drives the model is this detected regime here. So by waiting for regimes to align before we even place our strategies on top, you can kind of think of this as like a 2-factor authentication. And this is the performance. And we can see it's absolutely crushed the markets through a bear run, a bull run, and just chop as well over the past 2 years. So based on the initial value, we basically 3x a decently sized portfolio. We can see the alpha Sharpe ratio, win rate, and max drawdown down here as well. And again, this is just one single strategy that we never tweak throughout the period of the backtest. But because this is a living algorithm, we can always have AI adjust the strategies as needed with the regime detection here always in place and moving. So again, this is always going to be dynamic with the detected regimes, but all the strategies that we lay on top of it can always be changing to make sure that we're always optimizing for performance. And again, I'll show you how to do this exactly with AI. So for example, if we see that the bot is being too risky or that the drawdown is too high, we don't have to study math, right? We just open up our AI agent. We'll tell them, hey, the drawdown is too high. We need to tighten the entry signal. And now you might be thinking, why not just build a strategy on TradingView? There's tons of videos on this. Well, the fact of the matter is that strategies are pretty linear, right? If the strategy is dead, it doesn't work anymore, and you basically have to move on to a new script. TradingView scripts are basically just calculators at the end of the day. Like you'll determine, oh, if RSI is above 70, or if something else happens and this happens, then sell or then buy. Just very much like a simple calculation. But as I'm sure you know, the market isn't rigid, it's messy, and that's why we need this complex model. By using a fully customized algorithm in Python, what we have here is a probabilistic brain. It uses Gaussian distributions to calculate odds with technical math algorithms that you literally could not do in TradingView. It just simply doesn't have the power to handle complex matrix questions, operations, or even detect hidden regimes. And the reason why we have this whole complex algorithm setup versus just a script in TradingView is because markets change pretty drastically. The strategy that worked in 2024 is not going to work in 2025, and the strategy that worked last year will not work this year. But with this model, we can retrain and evolve to new market structures to consistently stay profitable. Now, let's go ahead and build this from scratch so that you have a working model to test for yourself. And if you want to get more information on this exact process, as well as join an active community of AI traders and investors, make sure to click the link in the description for my community, as we have full complete guides on how you can actually use AI for trading across any asset class. And if you're interested in more one-to-one work where we'll personally build you out custom scripts and AI agents for trading, you can book a call at our website in the description at aipathways.io. Now, to start building this out, we need to first build out the core logic behind the hidden Markov models. So again, this is the math that will basically determine what regime the market is currently in. So you can think of this as basically confirming that the bare bones HMM models do work at its core before we start layering additional strategies on top of it. Now, you can skip this step and do it all in Claude Code, but just to show you how I would think about building this out from beginning to end, it's typically easier just to start with making sure that the core math works before we move on to the full build out. So to show you how simple this can be, I just went ahead and pulled up ChatGPT, where we can have them essentially come up with the HMM logic for us to use inside our coding agent. So inside ChatGPT, all you want to do is copy my script, and you can use any other AI model. But what we're writing here is that we want to write a Python script for Google Colab that performs market regime detection on Bitcoin with HMMs. And again, Bitcoin can be any other asset that you want to focus on. Now, next we have our requirements. This is just the core data that we're going to use. So we have Yahoo Finance, which is going to take live market data for Bitcoin. Next, we're going to want to download hourly Bitcoin data for the past 730 days, and then important functions to use. These are just a little bit more nuanced so that the code is working. And then all we want from the chart data is open, high, low, close volume figures. And then we have some error handling in case the columns are multi-index. And then for feature engineering, we just want these three features: returns, range, and volume change. And for actually training the model, what we're going to be using, again, is Gaussian distributions across 7 different regimes. So that's where we're going to label all the different regimes that the market at that time was currently in. And then finally, what we want is a summary table of 1 row per state showing the return, volatility. And this is essentially going to help us train and detect regimes correctly for this asset in the past 730 candles. And then just to make everything a bit neat, we'll have a scatter plot with the close prices. So we're able to see like when a certain time in the market was labeled this regime versus this regime. So let's go ahead and run it and wait for the return result. And if that prompt was too long, or you just want the code directly, you can feel free to join the community, get it from there, and simply paste it into your computer. So this way you don't have to like finagle with the AI model back and forth to make sure that you're getting the exact same code each single time. So here we have our Python script. So just go ahead and click copy code. If you scroll down, you can see all of the code that is being generated. And this is essentially going to be what makes up the HMM logic. Next, what we're going to do is head into Google Colab, which again is a free tool that lets you run Python script without needing to really download anything on your computer. So go ahead and click new notebook from here, and we can paste in the code that we just got from the previous step. Once everything looks good, we can go ahead and click run to run the code. And awesome, we have our HMM regime summary. So it's actually plotted out on the historical Bitcoin chart when each regime was basically detected. So we have 7 starting from state 0 to state 6 on February 8th, 2026. This would technically be state 0. And then with that state, we'd know whether we should be aggressive in a trade, stop, or just not do anything at all. Now, this is great for visually understanding what it is we're doing here, which again is just labeling states, right? The probability of these states, but we need to layer strategies now on top of it. We also need to know the probabilities of the regimes. So even if it's a detected regime, we need to know the probability that it is indeed that specific, like state 6 or state 2 or state 3. And we need to know what to do once we're inside a state or once one state changes to another state. So that's why we're going to move over to Claude Code, add in this core logic here. But now here we can get like a little creative, add strategies on top, and constantly adjust the algo here to make sure that we're making profitable trades. Next, what you'll want to do is open up Visual Studio Code, which stands for VS Code. Now, this might seem a little bit daunting, but don't worry, it'll be super simple to set up. All this is going to do is help us essentially host our entire code base, as well as work with Claude Code directly. So we're not going to touch any of the actual code. We're going to have Claude Code essentially write it all out for us, but this is where we'll keep everything tidy inside our own folder. So the first thing you want to do is just click open right here and just either open up a blank folder that you have or create a new blank folder. And this is where all of your code is going to reside in. So now we're inside our folder. I just labeled mine HMM. And next, what we want to do is download Claude Code onto VS Code. So super simple. What you want to do is go over to extensions here. I already have this downloaded. Just go ahead and click this and add it to your VS Code. So this is what the extension looks like. All you'll need to do to really work with this is have your own Claude account. So once we do open up the extension, it's going to prompt you to log in. So this is basically where you type in your username and password. And then from there, you can begin using Claude inside our IDE here. So once the extension is downloaded, you should be able to see it in this top right-hand corner. So go ahead and click this. And then again, since this is probably your first time using it, it's just going to ask you to sign in. Once you do sign in, you're able to begin working with Claude Code. Now, this is the most powerful AI coding agent that's currently on the market. You can basically have them do anything for you. And in our case, complex math algos, that's going to help us learn the market better and become more profitable in our trades. So from our previous step, we had our static chart that labeled regimes, but we obviously want more features like live statuses. We also want to know what to do inside each regime. So this is where we get really creative by using Claude Code to add strategies, time frames, indicators on top of the HMMs to create something truly useful. And then at the end, we can make it look a little bit prettier since we are going to be working with this model day in and day out. Now you can go ahead and copy my prompt exactly. But what we're doing here is essentially implementing that same core logic that we guaranteed was working in the first step, as well as layering strategies on top. So what we first want to say is build a professional regime-based trading app. The core engine, again, is from the previous step. We basically used Gaussian distributions with 7 components to determine market regimes. So again, that was state 0 through state 6. And those were the 7 regimes that we saw on the chart. And once again, we have the same exact instructions here, which is train on 3 features: returns, range, and volume volatility. Then we want to automatically identify the bull run state. So this is basically going to that chart we just saw in the previous step and finding out when was the highest positive returns. Those are obviously labeled as bull run regimes. And then when the lowest returns were, and those were bear/crash regimes. Now, next we have the strategy logic. And this is, again, where you get kind of creative. You can add in your own strategies you want to layer on top of the regimes. The strategies are where we actually know what to do once we are in the correct regime. So in my case, I wrote that we're only entering a trade if the regime is bullish and that 7 out of 8 of these conditions are met. So again, you can tailor this to whatever your trading styles are, but I have RSI less than 90, momentum, volatility, volume, ADX price, and MACDs. Now, this is going to take some fine tuning between you and the model. And obviously, this is constantly going to change no matter what market you're in. Right now, it's 2026, but these same strategies aren't going to work in the same time period. This is where I'll show you later how you're going to basically go back and forth with the AI model to fine tune your strategy as time goes on. But the regimes do stay the same. Then we have risk management rules. So this is going to enforce a hard 48-hour cooldown after any exit, where the bot can't re-enter. The exit rule is to close the position immediately if the regime flips to bear or crash. And leverage, you can basically simulate how much leverage you want to use based on your own trading style and how aggressive you want to be. We have some boring aspects, the architecture. So this is how we're going to fetch all of the data, running simulations, the dashboard, which is going to show all of our data, as well as signals, the chart, where basically that chart we saw in the previous step, it's going to be plotted for us again, and metrics for the total return, alpha versus buy and hold, win rate, and max drawdowns. So once this looks good, let's go ahead and run this inside Claude Code. So as you can see, it's pretty intelligent. It's going to first create to-dos before it even works inside any of the files. And you can see all of the changes that it's making for you. So once you get to the finished product, you're going to know how this is at least architectured a bit. And it's essentially checking its own work. You're not just getting tons of errors on the output. So here we can see that the data loader file is where they're going to fetch all of the live market data. The backtester is the core of the engine, the strategy logic and risk management, which is all those portions of the prompt. Then we have the dashboard with the charts. And great, after like 5 minutes or so, we can see that it's finished all the to-dos and it's given you a summary of what was built so that you understand the architecture as well. Basically, there's going to be 4 main files: the data loader, which is fetching all of the data via Yahoo Finance. Then we have the backtester, which has all the HMM training data, auto labeling regimes, the 8 confirmation strategies, backtest engine with the amount of leverage and cooldown time periods we have. And all of this is basically packaged inside the dashboard here. What we have is the core engine, the hidden Markov models. We have entry and exits, and to enter, you're going to need 7 out of 8 of the confirmations from our strategy. To exit, it immediately happens when a bullish regime flips to a bearish regime. Have our cooldowns, leverages, and then on the dashboard, we're able to see how our current strategies and HMM models are performing. Then it's going to go ahead and label the current signal. So it's going to take all of the current market data and then tell you what regime you're currently in, whether it's changed from the last time, so yesterday's candle, and what you should do in terms of taking a trade or not. So what we first have is the back tester to ensure that the strategy works to a degree. Then we have the actual signals on what to do currently, so you know whether you should take a trade, wait, or do nothing at all. And then finally, it gives you the command to actually run the dashboard. So all you want to do is copy and paste this. So you can open up the terminal from below here, paste it in just like so, and it's going to go ahead and open up the window for you. So just off that first initial prompt, we have our complete terminal here. We have what the current signal is, which is cash. It's neutral. We shouldn't really do anything. See that out of the 8 strategies, if we look at today's candle, only 4 of them passed at 64,000, which is Bitcoin's price, basically telling you don't do anything. And then if we were to run the same exact strategies and HMM models historically, we had a 65% total return, 63% alpha with the 41% drawdown. This is our price chart with the regime overlay, basically telling you all the regimes you're in, the equity curve, and then you have all your trade logs and entries. If you want to start using this inside your actual trading, you can log your trades, be able to see when regimes change almost immediately. These are the confirmation breakdowns, and then our starting capital. And our final equity is if we just ran the same exact strategy, right? With those 8 confirmations and with the HMMs with 7 regimes. Obviously, we can tweak the number of confirmations. We can also tweak the number of components inside the HMMs as well. Just going to need a little back and forth. And like I mentioned, core logic is sound. As the market evolves, you will need to change out the strategies as well. And this is something we can do back and forth with Claude Code. And that's basically the coolest part, right? The first version of the algorithm is never perfect. Maybe the strategy is too aggressive, too passive. Maybe the drawdown is a little bit too scary. So you can literally prompt back and forth with Claude Code to essentially tighten up and make sure that your strategy is a little bit better and optimized. And then obviously you would want to risk overfitting as well when looking at previous back tests. But just to give you an example of what a prompt could look like, you can paste this in here where we can say strategy is working great, but I want to test a high risk variant. So this is where we're going to modify the back tester to add an aggressive mode. Here we can potentially increase the leverage from 2.5 to 4x, reduce the required confirmations from 7 out of 8 to 5 out of 8, add a trailing stop, and then maybe a checkbox to enable or disable the aggressive mode. So again, these are just little nuances that you can add. And then obviously you can just switch up the whole entire strategy completely. But you'll just want to have, a few weeks or months of trading data from yourself personally, go back and forth within the model and always tweak out those confirmations, those strategies. But again, the core HMM's logic is going to really help you out by determining your regime to make sure that the probability is good enough for you to even take a trade and apply your strategies. So even though the HMMs stay stable, the strategies always adapt. So for example, a 2020 bull run regime would have required a breakout strategy, for example, whereas in 2024, so about a year ago, the bull run regime would have required something like a mean reversion strategy instead, since the market is much more efficient. So by working with AI constantly on the algo and having them adjust your strategy on the fly daily, you can make sure that the model is trading the market as it exists right now, instead of just using your backtesting window history. So assuming this is months down the line, you can add a 48 hours cooldown or more, strict RSI checks, additional strategies, just things on top of the HMM models. So like I mentioned earlier, you can use my prompts exactly to build out your own system. If you like the way I set mine up in the beginning of the video, I have all of the full code files and prompts, as well as other information needed inside my community. Now, if you found this video helpful, make sure to leave a like, comment, and subscribe to the channel if you're not already, as it greatly helps out.